All right, buckle up because today we are diving into the ICT London Close Killzone,
Mm.
this YouTube video you sent.
Yeah.
It's got like high stakes trading strategy written all over it,
Hmm.
charts, jargon. It's a lot.
Yeah.
But luckily, our expert is here to help us kind of crack the code on this whole thing. And I think most importantly, figure out what you can actually use from all this.
You're not wrong. It does sound a bit like a financial spy thriller.
It really does.
But, you know, behind the kind of kitschy name, it's all about understanding how to potentially profit from this very specific time window in the Forex market.
Okay, so you've got me on the edge of my seat. London close, kill zone.
Yeah.
Lay it on me. What's the inside scoop on this mysterious trading window?
Well, so the London close refers to when the London Forex market closes for the day, which is typically between 10:00 a.m. and 12:00 p.m. Eastern Time.
Okay.
Now, this isn't just some random time. It often creates, exciting trading opportunities because of something called a retracement.
Retracement. Okay. That rings a bell, but remind me, what's a retracement?
Okay, so imagine like a rubber band stretched to its limit.
Okay.
Eventually, it needs to kind of snap back a little before it can stretch further, right?
Right.
That's kind of like a retracement in the Forex market, a temporary pullback in price before the main trend likely continues.
Okay, that makes sense. So after a big move, the market kind of takes a little breather during the London close, like it's catching its breath before the next round.
Exactly. And those brief pullbacks or retracements, that's kind of where the kill zone part comes in.
Uh-huh.
It highlights the potential for quick, decisive price swings during that window. Think of
Right.
it like rush hour for Forex traders.
Oh,
Oh,
okay. So if you
yeah.
can kind of read the signs, those quick swings could mean profit.
You got it.
Yeah.
Now, the strategy isn't about making wild guesses, though.
Right.
It's about recognizing patterns that often emerge during the London close.
Oh, okay.
For example, the video points out that on like bullish days when prices are generally rising, the London close often coincides with the day's high.
So it's like the market peaks right as London clocks out for the day.
Exactly.
Yeah. Interesting.
On the flip side, on bearish days when prices are generally falling, the London close often marks the low.
Fascinating. So by watching what happens during this London close, you can get a sense of whether a currency pair might continue in the same direction or potentially reverse.
You're catching on quickly. Now, the video really emphasizes looking for these setups on a very specific chart, the 5-minute chart.
Oh, yes. The video kept mentioning something about 5 minutes being crucial. What's the deal with that? Why 5 minutes?
Oh, it all comes down to timing.
Okay.
The 5-minute chart gives you a closer look at the price action during that London close window. Traders using this strategy are looking for quick entry and exit points,
Mm-hmm.
like lightning fast trades. They're not looking to hold on to these trades for a long time. They're aiming for smaller, more frequent profits, usually around 10 to 20 pips per trade.
Pips. Don't leave me hanging. What are pips?
Yeah, good catch. Pips is short for percentage and point.
Okay.
Basically, it's the smallest price move that a currency pair can make.
Okay.
Think of it like the cents in a dollar, but for currencies.
Okay, I'm tracking. So we're talking about getting in and out quickly during that London close period, aiming for those pip gains. It's like those moments in a video game where you have a small window to execute a combo move for maximum damage. Timing is everything.
That's a great analogy.
Yeah.
Now, you might be thinking, this all sounds very intense. I'm some day trading,
Right.
whiz. You know what? That's okay.
Yeah.
Even if you're more of a long-term investor, understanding these intraday dynamics, how a trading day unfolds,
Yeah.
can be super valuable.
How so? Fill me in.
Well, it gives you a better feel for how price levels might react during certain times of day. It's like having a behind-the-scenes look at how the Forex market operates.
So even if I'm not glued to the charts every 5 minutes, understanding this London close kill zone strategy can still teach me a lot about how the market behaves.
Absolutely. It's like adding another tool to your trading toolbox.
All right, I'm sold. But this video you sent, it doesn't just talk about the theory, does it?
No.
It actually shows this strategy in action.
You bet it does. It uses real-life chart examples to show how this strategy might play out with different currency pairs.
Perfect. Let's dive into those examples. I'm ready to see this London close kill zone in action.
Absolutely.
Okay.
The first example uses the USD JPY,
Okay.
and it's a great illustration of how the London close can actually set up a continuation pattern rather than a reversal.
Hold on, back up a bit.
Yeah.
You mean sometimes the London close doesn't cause a price reversal,
Right.
it keeps things moving in the same direction.
Precisely.
Oh.
In this USD-JPY example,
Yeah.
let's say the currency pair has already been trending upwards for a few hours.
Mm-hmm.
Then as the London close approaches,
Yeah.
things seem to pause,
Okay.
like the market is taking a break.
Right.
This is what traders call consolidation,
Okay.
a period of sideways movement.
Got it.
Yeah,
So it's like the market is catching its breath before making its next move.
that's a great way to put it.
Okay.
Now here's where it gets really interesting.
Okay.
During the London close, instead of reversing the price, suddenly breaks out from that consolidation
Okay.
and continues moving higher.
So instead of signaling a change, the London close confirms the existing trend.
Exactly.
Right.
It's like the market is saying, yep, we're still bullish on this one. Let's keep this party going.
I love how you make this so relatable.
Haha.
Okay, so if a trader were using the London close kill zone strategy in this scenario, what would they be looking for?
They'd be glued to that 5-minute chart,
Yeah.
watching for a clear breakout signal right around the London close.
Okay.
If they time it right,
Yeah.
they could potentially ride that continuation wave for a nice profit.
Wow. So even though the strategy is called the kill zone,
Right.
it can be used to profit from both reversals and continuations.
Yeah.
That's pretty cool.
Yeah, you got it. It's all about reading the context of the market.
Okay.
Now, this next example gets even wilder.
Okay.
It involves the Australian dollar, and it shows how the London close can act as a major turning point,
Okay.
particularly when the New York and London trading sessions overlap.
Wait, why does that overlap matter?
Well, think of it like this.
Okay.
When these two major financial hubs
Yeah.
are both open for business,
Right.
there's a surge in trading activity.
Okay.
More traders,
Mm-hmm.
more orders, more volume,
Right.
and all that action can create some serious price volatility.
Okay, so more potential for big moves when those sessions align.
Exactly.
Gotcha.
And the London close during that overlap can act like a pivot point.
Okay.
It can be the catalyst for some major price swings.
All right, hit me with the Aussie dollar example.
Okay.
What happened?
In this case, the London close marked the high of the day for the Aussie dollar,
Okay.
which on the surface seems like a typical bullish signal.
Right.
But here's the plot twist.
Yeah.
Instead of continuing to rise,
Yeah.
the market did a complete 180 and started heading south.
Whoa.
Yeah.
Talk about a fake out.
Right.
So even though it looked like a bullish setup,
Yeah.
the London close actually marked a major reversal.
You got it. And this wasn't just a small dip.
Yeah.
The Aussie dollar continued to plummet even into the next trading day.
Wow, that's incredible.
Yeah.
This is why I love these deep dives.
Yeah.
So many aha moments.
Right.
It's not just about the jargon and the strategies. It's
Mhm.
about understanding how these different market forces interact.
You said it.
Right.
And you know what? As fascinating as this London close strategy is, there are times when it might not be the most reliable tool in your trading arsenal.
Okay.
Sometimes
Yeah.
other market dynamics can drown out the signals we might look for
Mm-hmm.
around the London close.
Ooh, interesting. So are you saying there are times when traders should just walk away from the London close kill zone
Uh-huh.
when it's not worth the risk?
Exactly.
Okay.
And the video actually does a great job
Yeah.
of highlighting some of those situations.
Okay.
It's all about knowing when to use the right tool for the job,
Right.
which is something I'm sure you can appreciate in your line of work too.
Absolutely.
Yeah.
You've piqued my curiosity.
Okay.
Tell me more about these situations where the London close kill zone strategy might not be the best approach. What are the red flags traders should be on the lookout for? What are the red flags traders should be on the lookout for?
Well, the video talks about
Okay.
two main scenarios
Okay.
where relying solely on the London close might not be the best approach.
Okay.
The first
Yeah.
is what the video creator calls a Z-Day.
Okay.
And no, it has nothing to do with zombies, thankfully.
Z-Day, huh? That sounds ominous. What goes down on a Z-Day in the Forex world?
Picture this. The market is stuck in a narrow range,
Okay.
bouncing back and forth without any clear direction.
Right.
It's like a ship lost at sea with no wind in its sails,
Right.
just drifting aimlessly.
Okay.
That's a Z-Day.
So trying to predict anything based on the London close on a Z-Day would be like trying to predict which way a coin will land on its edge? Basically impossible.
You got it.
Okay.
On those low volatility days,
Yeah.
the London close might not give you those clear-cut continuation or reversal signals.
Right.
The strategy is all about
Okay.
it's best to sit tight and wait for a better opportunity.
Makes sense. You wouldn't want to be caught in the middle of nowhere with no clear path. What's the other scenario where the London close kill zone strategy might lead you astray?
The second scenario is a bit more action-packed.
Okay.
The video calls it a seek and destroy day.
Oh, okay.
Imagine a market that's been hopped up on caffeine all day,
Yeah.
super unpredictable with sharp price swings in every direction.
Okay, now those sound a little scarier than zombies. What makes seek and destroy days so tricky for traders?
It's all about those unexpected moves,
Yeah.
often happening towards the very end of the trading day, like a last-minute plot twist that nobody sees coming.
Right.
You might think you figured out the pattern, that you're about to capitalize on a London close setup, and bam,
Yep.
the market throws you a curveball.
Ouch, those late day surprises sound rough.
Tell me about it. And the thing is, on a seek and destroy day,
Yeah.
the London close might not give you any real clues about that final
Okay.
dramatic move.
All right, yeah.
In fact, it might even mislead you,
Oh, wow.
making you think a reversal is coming when the market's actually about to make an even bigger move in the same direction.
So it's like the London close is the unreliable narrator of the Forex market on seek and destroy days.
Exactly. You have to look at the bigger picture.
Right.
It's not just about blindly following any strategy.
Yeah.
It's about being adaptable, reading the market's mood,
Yeah.
and using the right tool at the right time.
Such a crucial point in trading and in life, right?
Absolutely.
Word.
Don't get me wrong.
Yeah.
The London close kill zone strategy can be powerful,
Mm-hmm.
but like any tool,
Yeah.
it has its limitations.
Right?
You need to know when to trust those London close signals and when to take a step back and reassess.
That's such a great takeaway. It's not just about blindly following a strategy, but about being like a savvy trader who understands the nuances of the market.
Couldn't have said it better myself.
Well, I feel like I've just had a crash course in the London close kill zone. We've gone from like deciphering trading jargon to like actually understanding how to use this strategy and even more importantly, like when to maybe sit one out. I think this has been a really productive deep dive.
Yeah, I think so too. We've really broken down this short-term trading approach
Yeah.
and shown that behind all the, cool names and chart patterns, it all comes down to understanding some fundamental market dynamics.
Right.
That's something every trader can benefit from, no matter their experience level.
Exactly. Well said, as always. And to our listeners, if this deep dive has like ignited your passion for like exploring the fascinating world of trading, stay tuned. We've got a whole lineup of exciting episodes coming your way, each one designed to equip you with the knowledge and insights to navigate the markets with confidence. Until next time, happy trading.